And okay, so we have started. And good evening on November 15th. And so we are going to have a powerful women's group conversation, or what we also call as PWG in Dress for Success Cleveland. And so we're going to talk about an interesting industry that a lot of times women don't consider to go into as a career opportunity. And so we want to bring that to light. And we have wonderful guests with incredible experience to share what those opportunities are like and to help educate us on our financial acumen, because you can always improve that.
Mhm.
Because once you make your money, you got to learn what to do with your money, what to do with your money. So this is a great time of year to have these conversations. So our two guests, we have Daphne Evans, and we also have Lynn Audrick. And they are with the Syncis Group. So they're going to explain their organization and the different opportunities that they have and to help broaden our horizons. So without further ado, I'm not for certain which one's going to speak first, if it's going to be Daphne or Lynn. But so I think Daphne, I see your picture up there. So well, I'm going to say it's Daphne then.
Yes, yes. Well, good evening. Good evening. I am more than excited to be here. Being from Cleveland, born and raised, educated in Cleveland, graduated from John Carroll University along with my husband. It's just so much of a pleasure to do this with my number one partner, Lynn Audrick. It's just great to be home. Dress for Success is actually near and dear to my heart. I volunteer with the organization in every city that I've been able to live in throughout the United States, and especially my home base, Cleveland location, because Melanie Bass, the executive director, and I have been friends since kindergarten. Our moms were friends. I knew her grandmother. So just to be a part, especially of her organization, is awesome. I've got over 32 years of corporate America experience. I've always, though, been entrepreneurial because I've consistently seen in corporate America how companies can do whatever they want to as it relates to an individual. And one of the things that's near and dear and been very close to me is to be able to create my own, no matter what that is. When I discovered Census, it was at a time where I was doing very, very well. I was doing well in my job, but I knew that I needed to do some other things because I needed to beef up my retirement. I just needed to beef up my retirement. My husband has always been extremely successful. When my kids were born, I stayed home with them. Don't regret 1 second of it. But being home with them, I actually took away from growing my money, not just our money, but my money. And so Census has been right on time because of what it is that we do to help women and families grow their wealth, get it, grow it, and really value it into the future. So that is who I am. I'm happy to be here. Lynn is going to tell you her story, and then we're going to roll right into what it is that we do and how we can help you.
So, good evening, everyone. Can you hear me okay? I can't see you because I'm sharing the slides, but hopefully you can hear me okay.
We hear and see you.
Awesome. Thank you.
Awesome.
Thank you, Miss Daphne. Thank you, Miss Chris and Miss Melody, for having us on this evening. I am super excited to share the number one career in the world, right? Not just in our country, but in the world, financial services. A little bit about me. So, my name is Lynn Audrick, as you all can see, and I'm a senior field director with the company Census. But I, too, like Daphne, have 30 plus years in corporate America. 25 of those years were in the retirement planning industry. And as Daphne said, right, corporations can do what they want to do when it comes to each individual employee. If they like you, they're going to help you. If they don't like you, they're not going to help you. And sometimes, even if they like you, they won't help you.
Mhm.
I, for one, I'm a graduate of Pepperdine University here in Southern California in Malibu, but I was a returning student as an adult. I had actually worked my way up to vice president in the company that I was working for. And as soon as I enrolled back in school and started obtaining, working towards my degree, they told me there was no other place for me. And I was very, very disappointed. Very disappointed because I had actually invested and committed to over $60,000 in student loan debt to go back and obtain advanced degrees in order to continue to work my way through the company. You know, one day I thought I was going to be the CEO of that company. And very politely, they told me there was no other place for me. So, being disappointed, but also thinking about, well, what is my next thing, right? I needed an exit strategy from where I was, but I didn't know what that was going to be. I was introduced to my mentor by an associate of mine through church, and she wanted me to hear some very important and valuable information. And when I heard the information, I something spoke to me, and I like to say, I don't know, you know, I don't want to offend anyone, but I am a Christian, and I did say that it was the Holy Spirit speaking to me that said, "This is it. This is what you have been looking for." And so, fast forward 8 years later, I have been able to transition out of corporate America. My retirement goal was age 55 from corporate America. I was 47 when I got introduced to this business, but I actually left corporate America 4 years ago. Actually, 3 years ago, 2020, at 51. So I just turned 55 last week. So I exceeded that goal, and now I'm working towards the next trajectory of my life and my next journey. So the information that I'm going to share with you, it is very important. Why? Because the financial services industry is the number one industry in the country. If you were to Google, or if you have an iPhone, you can actually ask Siri, what is the industry that produces the most millionaires? And the response will be financial services. But a lot of people don't know that, right? And they think of financial services as maybe just being a financial advisor or an investment manager. But you know, real estate is financial services, right? The mortgage industry is financial services. Life insurance and annuities, what I'm going to speak with you about today, is financial services. So there's so many facets of financial services that people don't know. So I am excited that you're here to learn about the financial services industry and the industry that produces the most millionaires. So I'm going to first give you the top 5 reasons why this is the best. Number one is that it is a $1 trillion industry, right? We say when people move money, someone gets paid. And people are always looking to protect their money. So as Miss Daphne said, what do? We help you to build your wealth, protect your wealth, and we also help you to preserve it. It is a licensed profession. Why is that good to be noted? Because people will give you more respect. They will actually want to listen to you because you are a licensed professional in your state in which you live. And you can also be licensed in other states, and it does not cost a lot to actually do this business. I am licensed in 20 states currently. So my home state is in California. I'm licensed in California and 19 other states. I know that Miss Daphne is also licensed in multiple states. Here with our company, you can build your dream, right? Not other people's. So when we're working for someone else or a corporation, we're helping to build their dream. And that's okay to help build an organization. But what about you? What about the things that you're most passionate about and the things that you want to do? You can utilize this platform to build your own dream. What we do is we help families and we help business owners, right? And so how we give back to others, not just the families and the business owners, but in our communities, right? In the organizations that we are part of, we're helping them to understand financial concepts that the wealthy use every single day in order to build their wealth. And then you have passive income, right? If you are looking for an exit strategy and how do you transition from one career to another or one business to another, this will allow you to be able to do that because you're able to make passive income, which is not active. It means that it's income that you're making in your sleep, right? You don't have to actively work for it, but you have multiple people or a lot of people that you're working with to help you to get to the passive income level. And I don't know how many people we have on, but I will be more than happy to answer questions after this. I should have said that in the beginning. So our industry is unshakable, right? And so let's talk about the things that have happened over the last 2 decades in the United States alone, right? First, in 2001, we had the tech bubble with the dot-com burst. Then in 2008, we had the mortgage crisis with the subprime lending. And then in 2020, we had COVID-19, the coronavirus pandemic that happened, right? And so what I'd like to share with you is that through all of those different things that have affected our financial system, the financial services and the insurance industry did not hurt at all. They were not affected by this. So in the financial services industry, when the dot-com bubble happened, this is an article from 2002, October 8, 2002, USA Today, right? In the money section of the newspaper. The article was titled, Market Carnage Hits $8.4 trillion. That says that the stock market hit an all-time low. The dot-com burst happened, right? That bubble happened and many businesses went out of business. Yes, the dot-com era created a lot of billionaires and millionaires, but when that industry crashed, it was $8.4 million lost in the market, the stock market, right? But here's what happens to our business and how our industry continued to grow, and it was still booming. In 2002, by the end of the fourth quarter, the annuity sales in the third quarter, fixed annuities, was $30 billion. That was a record that was set since the prior year. So even though the dot-com bubble had an $8.4 trillion loss, the industry and financial services in the annuity sales business, which we also do, was $30 billion. That was a quarterly record that was set in the midst of the dot-com bubble. And then we had the mortgage crisis hit, right? The mortgage crisis in 2008 was considered the greatest recession since the Great Depression. Okay, greatest recession since the Great Depression. I was in the investment services side of retirement planning at that time. And what I saw was a lot of people's pension money get lost. Pension money, the defined benefit money that your company will say, they will pay you after working 30, 40 years for them, lost in the stock market as a result. I talk about that because most people don't even know that their money is in the stock market. They think that they're guaranteed that pension money, but if something happens, it's not guaranteed. It's not guaranteed. Now, pension plans are guaranteed by the Pension Guarantee Corporation, right? The Pension Benefit Guarantee, PBGC is what it's called. They do guarantee that so that if a company becomes non-solvent and they have to provide pensions to their former employees or their retirees, they will do their best to make them whole. But our money is not protected. And that's where the financial services industry, which Daphne and I are part of, that's where we come in, right? Because we're helping you to protect that retirement income. But here's what happened in 2008. The same business, fixed annuity sales, rose 60%. It climbed to $107 billion in that year. That was 60% up from 2007 in the midst of the housing bubble, subprime lending bubble. So when people were losing their jobs, when investment managers like Lehman Brothers and Bear Stearns were going out of business, and banks like Countrywide Bank and other savings banks that were processing these home loans, right, non-stated income, they were going out of business. But our side of the business in life insurance and annuity sales continued to grow, right? So we have been proven to be recession-proof and pandemic-proof.
Lynn,
so why are we pandemic-proof, right?
Sorry, Lynn. I just wanted to add too, when you were talking about the pensions, right? Because it wasn't that much further after that so many companies began to reduce or eliminate pension plans. So now, a lot of the generations that are working now in their career fields have never even had an opportunity to experience a job that may have offered a pension plan in the first place, right? So It just
Yes.
kind of talks more about, how much more planful you need to be with your decisions. And it goes back to that comment both you all make, that a company, they make whatever decisions that they need to make for the good of the company and not necessarily good for the people that are working for the company, right?
Hmm.
So I just wanted to point that out because it's just interesting, that time frame, right? As soon as the mortgage industry crashed, and then next thing you know, all the pensions and everything like that started pulling back, and there's people
Hmm.
right now that are experiencing. They might have lasted they came in at the last tip of it, but now it's like they're being impacted by all these changes because they're the last of the generations of pension, and these are some of the
Exactly.
first jobs to go when there is a reorg at an
Hmm.
organization, right? So
Hmm.
it's just interesting how you kind of pointed the timeline, and it makes
Yes.
me think of that.
Mhm.
Absolutely. And then, companies are still freezing pension plans today, right? A
Mhm.
lot of large corporations do not offer pension plans any longer. And most recently, last year, AT&T, right, one of our largest communication companies, they actually they haven't frozen their pension plan, but they decreased the amount based on the interest rates rising. They actually decreased the pension amounts that they promised their employees. So last year, AT&T had a mass exodus of employees leaving as a result of not wanting to have their pension money decrease.
Mm. Wow,
So they left early, and it was going to decrease by about 10%.
that's a hit.
That's a hit, right? So you have a company that you've worked for 30 plus years. One of my clients was there for 32 years, and she had over 650,000. If she would have left, if she would have stayed, she did take an early retirement. If she would have stayed, her pension, defined benefit pension, would have been decreased by 10%. And she didn't want to take that hit, right?
Yeah.
Because we feel like we've worked all these years, right? We've worked
Right.
for this pension money. But then
Yep.
think about, as Miss Chris was saying, the younger generations, right? The millennials and the Gen Zs don't have an opportunity to even have a pension plan. They have to rely on their 401k and or Social Security if they're working in an industry that is contributing to the Social Security benefit,
Mm.
right? But here's what's happening: a lot of them are not.
Yeah. Yeah.
So for us Gen X's, the amount of Social Security that we thought we're going to get is going to be decreased because there's not enough the millennials, Gen Z's paying into it, right? Our Social Security payments are now covering the baby boomers,
Mm-hmm.
which there was millions of them. We're going to talk
Oh,
about
yeah.
them today as well, right?
Right.
And
Right.
so great point. So thank you for sharing that. And then here comes the COVID-19 pandemic and what happened during the pandemic. And we're still seeing some of the ramifications of that, right? 17% of the restaurants permanently shut down. In the United States, that's about 110,000 establishments. That's across the United States, right? Commercial real estate. So commercial real estate business declined because most people are now working virtually. Companies realize that it's more cost effective for them to have employees work remotely,
Mm-hmm.
right? So a lot of commercial real estate is just still out there vacant. And then retail stores, right? Brick and mortar stores. So we saw stores like Kmart go out of business. I think my last Kmart closed at the beginning of this year as well. Here, I'm in Long Beach, California. We saw other companies that are now being affected, Bed Bath and Beyond. Now it's finally hit them. We know that they went through this huge transition during that time and closed a few stores. Now they're completely shutting down. Other stores have also, right, decreased their brick and mortar presence in the retail industry, like Macy's closed down some stores. I believe Sears was in that process, and then the pandemic hit, and then it just made more sense, right? And then the gyms, right? How many people do we know maintained a gym membership during the pandemic? We couldn't go. I myself, purchased equipment from my home. Now I'm just like, okay, I'll jump on the treadmill at home or, lift my weights at home or jump rope at home. It's more cost effective, right? It makes more sense. People are getting back into that, but the level in which people were in the gym has also changed because we're still pretty much in the pandemic. It's not as deadly as it was before, with the vaccines, but we're still in it. It's still around, so it's still happening to people.
Right.
We just know now how to protect ourselves better. Right. And then movie theaters, right? You know, AMC Entertainment reported a $4.6 billion loss in 2020. That was 77% in revenue. So what happens now? Streaming services are now the popular thing, you know. So movies can hit, there's now they're opening in the theater, but what's happening is that within a week or so they're on your streaming platforms, so we don't really have to go to the movie theaters. And during the pandemic, the movies were actually you know, launching on the streaming platforms,
Right.
and that made that a lot of revenue, right? There's a lot of movies out there. I think I went to see, when did Woman King came out? So Woman King came out, I saw it in the movie theater. Next thing I know, I'm like, it's on Netflix already, you know? So it's
It was
like,
better than you went to the movie theater.
Yeah. Exactly. I went to the
I
movie
did go
theater
to
to
the movie
see that
theater.
too.
It was at that time I was like, okay, I'm gonna go to the movies and see it.
Yeah.
But they're coming really, so we don't have to do that anymore, right? We
Yeah.
don't have to do that anymore. And so as a result, the industries have declined. They're looking for new ways in which they can also do business as a result of the pandemic. And the ways that they're doing business is proving to actually be really great, right? Because they're making more money doing it that way. I just got a notification. So from Apple, right? I have Apple TV, I pay $9.99 for. I have the Apple News, that's another $9.99. And guess what? They're going up
They're going up.
$12.99.
Yeah.
They're
Right.
going up.
So I'm like, wait a minute. I don't need this, right? I don't even watch Apple TV. You don't even have enough things on there for me. But then guess what? When I go to cancel it, now you get, this just happened this morning. That's why I'm talking about it. Now you actually get, okay, there's different platforms. So you can have multiple services and combine them all for less money.
Yeah. Yep.
Right. So people, they're finding new ways to be able to market to us as well. But here's something that I also want you to see, right? It talked about the annuity business and what happened during the dot-com and the housing bubble. But in 2020 and 2021, when we were going through the pandemic, the life insurance business also doubled. Right. And so life insurance industry reported 20 billion of net income, 127% increase in 2021 in the first half compared to the first 6 months of 2020. And remember, in 2020, everything shut down, the entire world, transportation industry shut down, right? So no one's taking a plane anywhere, no one's taking a bus anywhere, no one's taking the train anywhere, right? Our industry and financial services continue to increase, right? There was an increase of 10% of deposits, $490 billion.
Wow.
Right? The life industry cash and invested assets increased 3%, 5 trillion. $5 trillion. It's a huge business. It was also reported, right? Forbes magazine reported while people were running to the grocery stores to get water, to get toilet
Toilet paper.
tissue, right? To get sanitary and sanitizing products. Guess what else they were doing? They were buying life insurance.
Hmm.
Why? Because the life insurance that we do now is no longer the same. You don't have to die to use it. Most of my clients were like, do I have the right type of protection? And how can I protect my money? Because we know the stock market took a dip during that time, right? Because nothing was happening. Nobody was doing anything. No one could make money really. And so life insurance sales during that time in 2021 had a growth, the highest growth that it had ever had since 1983. 1983. And here it says, right, another article in Smart Tax Planning, Americans are panic buying life insurance due to the coronavirus pandemic, right? And that's what they did, because the life insurance offers you critical, chronic, and terminal illness riders that don't cost anything to have. And as a result of that, if you were to get sick, even with the coronavirus, you can actually accelerate a portion of your death benefit. So that's what people wanted. Do I have the right protection? Do I have the right insurance? And then also protecting their money, right, from loss, because the stock market took a dip during that time. And it's still taking a dip. It's up and down. Last year, the market was down 25% at the end of December. So people are still losing money and wanting to protect their money. So as we go through this information with you, I want you to be thinking about some things as I'm sharing with you, right? In every adversity, there are seeds of opportunity. So ask yourself as you're hearing this information, are these people trying to make a positive impact on others, right? Which we are. Is there an opportunity to make money here? Is this something you could potentially see yourself doing? And then ask yourself if you know anyone who could benefit from the message that we're about to share with you. Okay. So a little bit about our company. So you heard Miss Chris say that we're from a company called Syncis, right? Syncis is an independent marketing organization. We're not the financial services provider. What we do is we contract with the leading product providers in the country to be able to offer our clients the education, right? So you'll hear more about that in our next presentation that's scheduled at the end of the month. What we do is we provide education to our clients so that they can make informed decisions about their financial situation, right? So we give them the information and we contract with these companies to be able to offer the client options and the options that are best going to fit their plan. But our company has been around for 13 years. And in 13 years, we have put $8.4 billion in death benefits in place. So that's how many policies we've actually been able to put in place for our clients, or the death benefit, the face value, $8.4 billion in 13 years. We've helped 41,000 families in those 13 years. Okay. And 94% of the policies that we put in place for these families are in place very, very strong. The reason why our business stays on the books, we call it a persistency rate, is because of the way that we educate the clients first, right? Yes, life insurance and annuities are the byproducts of what we do, but it's not what we start out with. We start out with educating, right? And we feel that it's important for people to understand these basic financial concepts so that they can make an informed decision. And as a result of the way that we do business, our clients trust us and they know and believe that we're doing the right things for them, because we're not trying to sell them up front. We're providing the education first. And that's really important when you're talking about servicing people, right? We want to be able to build the relationship and build the trust. And that's what we say we're in, the relationship building business. So then you say, well, I still don't know who Syncis is as a company, right? But maybe you heard of our equity partner, Fidelity and Guarantee Annuities and Life Insurance Company, or F&G. They actually purchased a 49% equity in our company in 2023, this year, January. And so Fidelity and Guarantee Annuities and Life Insurance Company is a $44 billion company. Now, most companies like ours will sell outright, but because of the way that we do business, we didn't want to sell, right? But we were looking for a partner that had the same goals and the same missions as ours. Okay. And Fidelity and Guarantee brought that to us. And so this article in the Wall Street Journal, so this was big financial news, because most companies, as I said, sell outright. But because of the way we do business, Fidelity and Guarantee was more than happy to get a 49% stake, right? Because they still make money, even though we work with other carriers. They're not the only one. We have 40 carriers that we can contract with, so we're non-captive. But the article states here, which I want to point out, and I think this is really important, is that it says it validates diversification strategy to expand own distribution while boosting presence in underserved markets. Why is this important, right? So expansion is what we're looking to do. We are currently in 46 states. We have 46 offices across the United States, right? We're looking to expand that, right? We don't have an office in Cleveland, Ohio. We would love to be able to expand. But in our expansion, we also want to make sure that people in the underserved markets know who we are, because most investment managers and financial advisors are not speaking to people in the low income and middle income earning brackets, right? They're just not. We're not getting the information. So our mission as a company is to be able to bring this information to the masses, but we need more people to be able to help us to do that, right? So that's why we're here today talking about the opportunity in financial services. And, I met with a day trader about 4 months ago. And he said in my office in a conference room, and when I said most financial advisors and investment managers are not speaking to people, or they won't even take an appointment or a meeting with someone in a middle income or lower income earning bracket. And he says, you're absolutely correct. Goldman Sachs won't speak to someone unless they have 4 million in assets, right? And so it is really our responsibility to make sure that we're educating Black and brown people, that we're educating women, that we're providing them with the information. We already know that there's an income disparity within men and women, right? We already know women don't have the same opportunities. What we are doing is changing the face of the financial industry in a huge and major way. Right? Because when I started in the industry, not only would I be the only female, most times I would be the only Black person. And I started really young. I said I just turned 55, but more than half my life I've been working in the industry in some capacity. And then Bloomberg also shared the article, right? So again, this was big financial news. Bloomberg, Wall Street Journal, it was also on Yahoo Finance. So I wanted to share that. So just let you know that while Syncis may not be a household name, our equity partner is. And eventually we will be doing that, and we're looking at moving to an IPO, an initial public offering, in the next 2 to 3 years. So, when a company goes public, now the people who help to build the company become instant millionaires and or billionaires. Okay, so that's the opportunity that we also have here. It's not just that this industry is highly compensated, but now we have an opportunity to change the entire trajectory of our families financially. And so let's talk about what's
Lynn,
coming down. And yes.
I was also going to just make one other point too inside of that in terms of how important our mission is to Black and brown people, because it is also taken for granted that we will not be in those rooms where other people are. It is taken for granted that we do not know nor can get the information. And one of the fallacies is we don't have the money to do it. We actually do. And what Lynn and I do, along with our other team members and people within our organization, is that's where the education, and that's why it's so key, because we do look at the whole picture of a family, and we are able to give ideas and help to redirect, because that is what we aren't getting, but the others
Yes.
are.
Absolutely. Thank you, Ms. Daphne, for sharing that. Here's the other thing, too, is that there was an article in Forbes magazine. You can research it online. I don't remember the exact name of the article, but it was in 2017. If you Google Black American net worth, that article will probably come up. And someone did some research and said that by 2053, Black Americans will have zero net worth. So we know what we were called when we had zero net worth, right? We had ancestors and we weren't even thought of then, right? We will not go back to that. And it's our mission to ensure that we do not go back to that, right? Because our ancestors and the people that came before us, and even what we're doing, the work that we're doing this to ensure that as we move on in life and then transition, our families, our kids and our kids, right, will have the generational wealth transfer because of our efforts. It also said by 20 years following 2053, Hispanic Americans will have zero net worth. So we want to make sure that we're, we say boots to the ground, right? We're out there and we're talking and we're advocating for the financial success of everyone we come in contact with. No matter where you are financially, no matter whether you have assets or not, we want to be able to provide you with the information so that you know what you can do when you're ready, if the time isn't right. And so when we're talking about, thank you, Ms. Daphne, great timing, there is going to be a $68 trillion wealth transfer for financial advisors, for people like us, right? There's going to be $68 trillion, and I'm going to share with you why. Here's why. Because there's something called a baby boomer generation born between 1946 and 1964. Those individuals right now at the top of the years are age 77. My mom is a baby boomer born in 1946. 1964, those people now are about 59 years old, I believe. So Guess what? When they're 59 and a half, if they have money inside of a pension plan or a 401k plan, they can move their money. And most 59 and a half year olds or older right now, if they're not taking an early retirement, the thing that they want to do is protect their money. Okay. 81 million Americans were born between that time. And as a result of that, every industry that we can think of had a financial boost as a result of these individuals, right? Because as babies, the baby food industry grew because 81 million of them were around, right? The toy industry, the fast food industry, because not only as they got older, but then what happens is they have their own kids, right? And both parents are typically working outside of the home. So now trying to get home to prepare meals, was not always able to do that. And so what happens? Fast food industry, White Castle, A&W Root Beer, all of these industry all of these fast food places skyrocketed as a result of this generation. And then new cars, because most baby boomers bought their kids cars. My mom helped me to get a car, right? I helped my son to get a car. So they helped us with that. And so the auto industry, and then they purchase homes. I mean, most baby boomers I know own their home. There's not many of them that don't, right? And so they also purchase homes. And then when they retire, they want to retire happily, but they also want to make sure that they're not going to outlive their money. They would rather leave money here and pass down to their family than to run out. Because if you run out of money, what does that mean? You have to go to work in some capacity, right? My mother was one of those people relying on Social Security. So just want to put that in there, right? There's a lot of them that are still looking to protect their money because maybe they don't need all of it. Maybe they have multiple resources of income coming in, and as a result, they have money that can be transferred down. And so that's what we help them with, right? And we say, when money transfers, someone gets paid. And then also, why now? Because the financial advisors in the industry are aging, they're getting older, and they're looking to retire, right? The average age of a financial advisor is 57, but the majority of them are 66 and older. Yes, 66 and older. Unbelievable, right? So we need a new generation of financial advisors and people coming into this industry as well. And then there's a shortfall of financial advisors because our young adults are not going into the financial services, right? They may be going into, fintech, right? The technology side of the financial services. And maybe they're going into other tech jobs. So as a result of that, there's a shortfall of financial advisors. So we need to have more, which is why the opportunity right now is really great for everyone who might be interested. And then the baby boomers again, right? They are concerned with protecting and growing their money. That's what we do. We help them protect what they have and to continue to be able to grow it, right? They're also concerned with income distribution. Am I going to have enough income in retirement? Am I going to be able to live the same lifestyle as I am living now as when I retire? And then wealth transference, meaning that they want to be able to transfer wealth down to their family members. I like to share, right, in this career with the company that Daphne and I partner with. Guess what? As a manager here in this company, first level manager, what's called a field director, once you lock in that position, any residual income that comes into your company because you're building your company under the umbrella of Syncis transfers down to your family members when you're no longer here. So what I'm doing, even though I'm not a baby boomer, right, and I'm concerned about this, I still have a wealth transfer that's going to happen to my son and his kids. And then encore careers. When we say retirement, especially for baby boomers, a lot of them are looking for something to do, right? So retirement for them may not be not doing anything. It may be doing something that brings them more joy, right? That's something that they're more passionate about, right? What are you more passionate about? What can you do? Are you passionate about helping others? Are you passionate about, providing information and educating people? Then this could be an encore career for someone who might be a baby boomer who maybe is in retirement, right? My oldest agent in the office is 85 years old, and she has more energy than I do. It's amazing to see her go, right? I have to take a break with her. I'm like, okay, we have to slow down a little bit, right? So she's a young 85-year-old, and this is an encore career. She was in education, right? But she still wants to be able to educate people. So this is a perfect opportunity, not just for younger generations, not just for Gen X's, not just for millennials and Gen Zs, but also baby boomers find joy in doing this. And it's something that they're concerned about, because most people, if a baby boomer is still working, like my mom, they're more afraid of, you know, if I don't have anything to do, my life may go by really quickly, right? They're still living at their fullest potential, and so they're always looking for something to do. So it may be a really good opportunity for someone who's a baby boomer as well. And then, of course, why now, right? Because our three-legged stool is no longer reliable. The three-legged stool, as we see it in terms of our money and how much we're going to have in retirement, or pension plans. But we just talked about that, right? Pension plans are no longer in existence, or we're not getting what we were promised, right? Social Security may not be enough for us in retirement, right? Social Security Administration tells us it is a supplement. It was never intended to be the only source of income in retirement. It's only to subsidize the shortfall that we may have. So our savings, right? If we're not saving money for retirement, what do we do? That three-legged stool is really, really falling apart. Okay, it's teetering. It's no longer stable. And so, as a result of that, we have something that we can help our clients with, right? To make sure that they have some financial stability and a strong financial foundation as they move into the retirement years. And then building wealth, right? When we're talking about building wealth, remember that's what we said we help you with, right? We help you to build your wealth, to protect your wealth, and to preserve it. So in building wealth, we're talking about our various types of interest rates that we can utilize. So we have a fixed interest rate, right? Our fixed interest rate are really the rates that we get inside of the bank in our savings accounts, but they're not high interest rates, right? So with the increase in inflation these days, if our interest rates aren't as high or outpacing the inflation interest rate, then our money's not making money. Even our certificates of deposit are CDs. So this is where we come in, right? To show clients that you can utilize different products in order to build your wealth with a higher interest rate than we may be getting inside of the bank. And then with variable rates that are going up and down, like we see in the housing market, right? So those variable rates going up and down also can be a problem, because if most of the clients' money is in the stock market, then they have the risk of losing. Okay. If most of their assets are in real estate and the real estate market isn't moving, they're losing. Right. I met with a client today, and she came from the mortgage industry, and she, was a little discouraged in her corporate job. So she left, and she took all of her 401k money and started investing in flipping homes. It's only been less than a year. And she goes, I have to go get a job because I have 4 homes and they're not selling. She says, it's great to have 4 homes that I was able to flip, but it doesn't do me any good if I'm not making any money off of them. Okay. Interest rates in the real estate market are changing, and so people are not able to make money in the real estate market. They have to wait until people are buying and selling homes, right? And if that's not happening, they're not making money. The money that we make here is consistent, right, on a weekly basis, and we're advanced a chunk of that. I'll show you compensation in just a moment as well. And then what we utilize are called index rates. Index rates give us the high potential gains as if our money was in the stock market, and it gives us the safety as if our money was in the bank. So we don't have the fluctuation of going up and down. Therefore, we have no risk of loss. Okay, so that's how we help you to build your wealth and understanding the different types of interest. And then we talk about taxation, right? Taxing of our money is the most significant expense that we will encounter. Whether our money is taxed now with our ordinary income and our investments, or even our businesses, or taxed later in our retirement with our 401ks, our pension plans, our thrift savings plans if we work in for the federal government. Those are taxed later. So the taxation is going to happen because everything that we do requires us to pay taxes. So there's no getting around that. We have estate taxes when we die. We have sales taxes when we spend money. We have income tax on our income earnings, but we also have capital gains tax when our money makes money. So we're significantly impacted when it comes to taxation, right? And so what are we able to do? We're able to help our clients to not avoid taxes, but to minimize the tax impact on their money. So in our next meeting, I won't spend a lot of time here because this is the next thing that Miss Daphne will go over in the next meeting when we come together at the end of the month. But we talk about the 4 steps to creating financial strength, right? We talk about having a strong financial foundation. Most people don't know the smart money order. That's where we come in. We come in with the education piece, right? To be able to give our clients the information that the wealthy utilize every single day to make sure that they can make more money. Okay, so we'll talk about that on next week. And then, so step 1, managing your money wisely. Step 2, protecting your income and your family. We'll talk about life insurance and how it works to protect you now so that you don't have to die to use it, right? You can use it while you are living and in recovery from a critical or chronic illness. Or if you have a terminal illness, it's backup money that you can have to cover financial expenses and obligations until you are able to go back to work. And if you're not able to go back to work and there's a terminal illness diagnosis, it would help you to be able to sustain yourself until you're no longer here, and also provide your family with some financial resources, especially if there's multiple incomes lost in the family, not just the person who's diagnosed with the illness, but maybe the person, the family member that has to also decrease work hours or stop working to take care of that ill family member.
I've got a, I'm sorry, Lynn. I just wanted
Mhm.
to say, and I know we're going to get into this the next time when we meet, but particularly for women, right, in this step right here. So when there's a career change, or they're the ones having to be the caretakers of family members and then they don't have income coming in, or because of all that additional stress that, women take on, and the health issues that women deal with, right? This becomes
Mhm.
a big piece that women
Yes.
in general need to pay attention to, not only how they protect their families, but then, with the how long we're living, how we're living, right, and making sure
Mhm.
we have
Mhm.
enough income to help during those times. So
Yes. Mhm.
this is critical. Where a lot of times, like you said earlier, the Social Security thing becomes like the reliable piece, or whatever kind of savings. But these
Mhm.
decisions and this step are, all of them are important, but it's something that particularly women, particularly Black and Brown women, have to really pay attention to. So I just
Yes.
wanted to throw that out there.
Absolutely. And here's the thing, right? Women, especially if the husband manages the finances and does everything, what happens if the husband passes away or gets ill, most women don't even know where to start.
Hmm.
They have no idea. So what we're doing, the information that we provide, particularly for women, it's so important, as Miss Chris said, right? Because this is a part that we're so busy taking care of everyone else, we forget about when something happens, because we're just thinking about how do we stay afloat, how do we stay ahead, how do we maintain ourselves so we can continue to take care of our families, and we're putting everyone else before ourselves, right?
Right.
And so the information that's provided, right, the importance of, as women, understanding is just so great. It's so great. Thank you, Miss Chris.
Mm.
And so step 3, we're going to talk about the accumulation of assets, right? How inflation, taxes, and risk affect our money. Okay. And then step 4, preserving your legacy. So Miss Daphne will cover that next week. We'll both be on, I think, right after Thanksgiving, right? So we'll cover that. And, you know, hopefully you all will join us again, because that's going to be the important information, with regards to not just, your understanding now of the opportunity in financial services, but also, if you're in a place where you're not, you know, um, ready to maybe transition into something else. But I will share with you, This is a business that you can do part-time, right? You can do it and not have it actually interfere with what you're doing right now. So when I first started doing this for the first 4 years, I actually did it part-time. I had my full-time job as a retirement plan administrator, and I managed 5 retirement plans for a corporation here in Southern California. But I, made it my mission, right, to be able to get this information out. And the way that I did it part-time, I would do, maybe 7 to 10 hours a week, but I also did seminars, right, in my church, right? I did financial literacy seminars with other organizations and partnered up with other friends like we're doing today, right? Other friends that are running corporations and organizations that are within the community so that we can educate the community. And so you don't have to do it full time. You can start this business part time. And so all of the things that you've seen right now, we're talking about service costs, right? And most people that I sit down with when I'm sharing the Your Money Matters and the 4 steps to creating financial strength, most people will say, well, how much is this going to cost me, right? And guess what? It doesn't cost anyone anything. We do not charge for our services. Now, you're probably saying, well, how do you make the money if it's the highest paying industry, right? Well, it is. We don't charge our clients because the companies that we work with compensate us in commission. So our clients can come in, sit down with us, go through our processes, and feel good about the service that we're providing, and it's not going to cost them anything. Because most people are afraid to sit down sometimes because they don't have the money, right? So they think they have to pay for the service. Unlike a financial investment manager or planner, where the fees come out of the client's money, we don't do that. The companies that we work with have set aside money. So even the money in which the client may be paying in premium, or the money that they may roll over or put into an annuity, our fees do not even come out of that money. So the client's money is not touched at all. So they can move their money around and do things without worrying about, okay, I'm not making money, but it's costing me, $250 a year, or $250 a quarter, or $2,000 a year, depending on how much, because a investment manager fees are probably like 1% of the client's overall asset value, right? And so if they have 2 million, then they're paying 200,000, right? I mean, so you got to think about it that way. It does not cost anything for us to sit down with the client. So that gives people comfort, and they are more relaxed when they come and talk to us, and they're more they will share more. They will share more with us rather than not sharing everything. And that's what we want. We want to have a full, transparent meeting with the client. And as a result of us not charging them anything, they're more inclined to want to do this business with us. As a client and or as a business partner. So it is absolutely free for the client. As I said, we're not a nonprofit. We don't work for free, but this is a very highly rewarding business, not because of the high compensation that we make, but because of the way that we impact the people, right? The way that we impact the people with the information that we provide them, it just carries a long way. And as a result of that, we open up opportunities to have more referrals because our clients are always referring people to us as well. So we're not running out of people to talk to, but we need a lot of people to help us to talk to these people. And so, as I said in the beginning, the financial industry has high earning potentials. We get upfront commissions. We also have residual income that we can make as well. So we will share with you how we earn our income, but also to let you know that you don't have to have experience in financial services. We have a very strong mentoring program here at our company, and we take you through all of the steps that are required for you to be able to build your business inside of this business. And when we say mentoring, it's not that we're giving you the information and having you go out and share it. We're actually right there with you. So we're partnered with you hand in hand, because what we're looking for in our business is we're looking for people who want to be in business with us over the long term. Right? Not someone who says, okay, I'll give it a try, and maybe things are going a little bit slow, right? And so it's not going fast enough, so then they give up. We want people who say, I want to change. I want to change my life financially. I want to change the people that I love and care about lives financially. And I'm willing to go the distance with you, right? And so again, you can start where you are and you don't have to commit to a full-time work schedule, right? Because it is at your leisure, and you are independent, right? So you can make your own hours. But think about this, right? Can you help one client a week? Can you share the information with one client a week, one person a week, or can you introduce Miss Daphne and or I to one person a week, right? Because in the beginning, we will do this with you. We will not leave you by yourself at all. There are management opportunities, right? So depending on how you see yourself in this business, if you decided that, hey, I want to really build a business, right? I want expansion too. I want to be like all of these other businesses where I have multiple locations throughout the country or just in my city, right? I believe here, well, I know within Southern California, we have 5 offices. Southern and Northern California, 5 offices combined just under our business umbrella, right? And so with the management opportunities here, you're afforded the opportunity to be able to expand your operation across the United States as well. And we will help you to
But
do that, right? Yes.
we don't have an office in Cleveland yet.
We
Just
don't
saying.
have an office in Cleveland yet,
Just
right?
saying.
So we are
I
looking
was
to
just going to make
expand
that
there.
comment. Yeah.
Absolutely, right? Absolutely. And then we believe in our team, right? We value the members of our team. This company cares so much about um, us making money and us helping people. I'm going to share a couple of other things, right? And I told you that we have an equity partner with F&G, and they wanted to buy us outright. But our CEO made the decision not to sell the company outright and only sell the 49% stake because he wants more people to benefit from the opportunity to become millionaires. And he did not see that it was right that he would sell the company and sell into the sunset, right? What he is doing is sharing in the wealth. So bonus checks did go out, and some people did become millionaires, right? There's an NDA, so we don't know who those individuals were. I kind of have an idea though, but we don't know who those individuals are. But he wants more people to benefit from that, right? And so the value that they put on us, and the value of us being able to build this company to which level it is right now, it's significant, right? And it makes a huge difference. And just in my own personal story, I've had some health challenges. And even through those challenges, when I was unable to devote the time to my business partners and my mentors in the business made sure that my business and my team continued on. And I always got the phone call to say, what is it that you need? What is it that I can help you with while you are away or until you come back? I also meet on a weekly basis with one of the executives in the company every week, and she doesn't have to do that. Right. But it's the level of care that this organization has to see everybody win. So that's what I love about this company, and they have proven to do that, right? And so as I get to a close, before I get to the compensation, we had some questions for you in the beginning that I wanted you to think about, but here are some other options for you, right? And you think about what you will do or what you would like to do, right? Do you want to become a client? Do you want to refer clients and get paid? Because you can be a referral agent and also get paid. Or would you like to transition to a new career? Right. And so we're open to talk with you about any of those. But here's how we say our agents actually win, right? So compensation and how we make our money is important. It's very important because people want to know if you're independent and you're building your own business, how are you making money when you're not charging your clients? So here's the case studies. So this is a case study of family protection. So our names have been changed for anonymity, right? But we did have a married couple with 2 children, minor children. Jerry, the husband, works outside of the home. He's the only income earner. His wife, Jane, works inside of the home, right? So she's a homemaker. She's the CEO of the house, right? Because that's a huge job. We all know that, right? And with the 2 children, okay? Now they're 40 and 35 years old. Jerry, on an annual basis, net income after taxes, he brings in $7,000 a month. But their expenses are $5,000 a month. They have no wealth protection. What happens if Jerry became ill and unable to work? Okay. Or what happens if he passes away? So they needed to have the protection first. Okay. So what we did was we, of course, educated the family on the protection options based on their goals. So we do something called a personal financial checkup with our clients, right? We want to understand what are your financial goals, short term and long term. And so based on that, we put two types of plans in place. One was a term policy that's going to cover the assets that are going to go away over a period of time, like the mortgage and like the college educational expenses, excuse me. Excuse me. And then we put in place a permanent policy. So combined, the policies for him are $500 a month, $150 for the term, $350 for the permanent policy. $500 a month is $6,000 a year. So a compensation for the $6,000 a year that they're paying in premium is advanced to us up front. Okay, so $500 a month, $6,000 annually for a field director who is at a 75% contract level. 75% of that $6,000 is $4,500. That's on what we call two cases, two plans that we put in for a family. Only two. Guess what? We do a lot of these every month, right? I mean, my team alone last month, I think, did 32 of these, right? So imagine. And of course, every client can pay a different premium amount. Can everyone pay $500 a month? No. Are there clients that pay much less? Yes. But are there clients that pay much higher? Yes. Clients can pay $50, $100, but we also have clients paying $2,000, $3,000, right? We got someone right now saying, I need to put $20,000 in there a month. So it varies. So the compensation level is not limited, it is unlimited. So you're not limited on how much you can make, right? It just depends on how much time you put in with providing the information for the people that you're talking to. Okay. And then at a senior associate level, 50% of that 6,000 is $3,000. Okay. So that's the compensation on two client plans. We call that monthly money because we do multiples of these on a monthly basis, and every week we're compensated. But then we have what we say is our lump sum money, right? And so this is lump sum money on our retirees. So we have a retiree, a married couple. The husband is retired police officer. The wife actually works for the postal office. Okay. She is not retired, but he is. They are already living off of his retirement income. So now, because of the way that the industry is and the market is, her 401k or thrift savings plan, because that's what they have, same thing, but they work for the post office. So it's called a TSP. She's afraid of losing her money and running out of money when she retires because the market keeps going up and down. See, at her age now, she doesn't have enough time to actually replace the money that's lost. Someone who's maybe 30 has more time. She doesn't. And so when we educate them on the protection needs of her money, right, we're going to go with her money because they're already living off of his retirement. She rolled over $300,000 into an index annuity, a fixed index annuity, an annuity that's going to continue to give her growth and high potential gains. She's not going to lose anything. And then when she retires, she'll have a guaranteed income for life, even if her money runs out. Okay. The compensation on the annuity is 6%. So 6% of that $300,000 is $18,000. Okay. Here's the compensation. A $300,000 rollover at 6%, $18,000. A field director at a 75% contract level, compensation lump sum, $13,500. A senior associate compensation lump sum, $9,000. So that's why we call it lump sum money, because we get this money up front. Okay. And it's protected. Here's something that you also should know. Annuities can only be obtained through insurance companies. So if an investment advisor does not have a relationship with an insurance company, they can't even offer you annuities. And insurance companies protect our money. So they protect themselves to protect our money, dollar for dollar. People don't know that, right? So Ms. Daphne will share more with you about how the insurance companies work as well. So our system is proven. Our Syncis system is proven. So we call it the third wave of what we're doing. So first and second wave were other companies like ours that sold outright. In 2006, our co-founders, John Kim and Les Chalet, embarked on this journey to make sure that the system that's in place can last beyond what it is that they're doing. Our business has sustained the test of time through, again, the dot-com, the housing bubble, the pandemic, and now the endemic, we call it, is happening in the third wave and the second chapter of our company, because our company, and with the system that's in place and with F&G, our equity partner, we're looking at an initial public offering over the next 2 to 3 years, and we want to be able to help as many people, and we need more people such as yourselves. So the next thing I'm going to do is I'm going to stop sharing here. I am going to open up for any questions that anyone may have, and we'll go from there.
Man, this was an incredible information, and I want to make sure that if we have Zaraka on, make sure to give her some time um,
Yes.
to ask some questions. But there were a couple of notes that I kind of took. One, I love that term, encore career. I have never heard that before. And I was trying to think of, because there are a lot of people that once they retire from their, call it their first career or second career, whatever it might be, they still work. Some of it is out of a need, but then hopefully they're able to do something that they can enjoy. So at least that kind of gives a different thought process on how to think about that in general. Encore career, I had to make sure I made a note about that. But when you had mentioned it's important that we build, protect, and preserve, because a lot of times, particularly with our community, we do a lot to try to build, but sometimes that protect and preserve is unwavering a little bit. It's not as steady, and or it's not even explored, because we
Mhm.
think back to like what's been some of our practices that we've done before that we've learned from generations to generations.
Yes.
So I think that's important, particularly with, and again, with women in general. How do you build it, but how do you protect it and preserve it, is definitely key. And so I know I learned a lot more about census because I didn't know about it. Like you said, there's no office here in Cleveland, so we got to work on that, right? So, so we have to work on that. But I think the important factor about how to educate clients
Mhm.
first and not trying to push, another agenda. Like you
Right.
said, it would help to relax people to talk about their
Mhm.
financial situation. And I think it's important that not to think about like how much they just have right now, because like you said, was it Goldman Sachs, they won't touch you, if you don't have $4 million or whatever like that. I'm like, sure, let me go ahead and write that check out, um,
Yeah.
to do that. And but that um, doesn't give, that should give us still an opportunity to make money. I mean, like that's just ridiculous that they won't touch us.
Right.
I get it. I'm saying us because I know I don't have $4 million, but
Yeah.
Yeah.
But you know
I
what?
think.
But here's
Oh,
go
go
ahead,
on. Go
Miss.
on.
So here's another thing. I want to share an example. In the pandemic, so I had a friend who works for a very large auto company, right? And he makes really good money. He'd been with that company for 25 years. It's a little over that now, but when he had, well, 30 years now, it was 5 years ago. I sat down and talked with him, and he relocated across the United States multiple times. And in this last relocation, he said, I have decided that where I'm at now, I'm going to say I don't want to move anymore. I've already told the company that. So I'm purchasing my home here, and this is where I'm going to be based out of. So he says, I want to talk to you because there's some other things I know that I need to put in place outside. I only want to work another 12 years until I'm 62. He goes, but I'm going to retire from here because I can, but I want to go on to do something else. So I said, well, let's meet. We met on Zoom. I said, can you pull up your 401k statement? He goes, yeah, I should have about 800,000. I'm like, great. And I said, so you've been putting into this plan since you started, right? And he goes, yes, since I was 25 years old, which is great. He pulled up the statement. He had about $385,000.
Ooh.
And he
That's
goes,
painful.
wait, something can't be right. And I
Mm.
said, well, when was the last time you looked at this? And he says, I haven't. I said, you haven't recently, or you just haven't at all? He goes, I never look at it. The money just goes in there. I never look at it. And I said, you have to look at it. And I know what they told you because I'm about a year younger than him. I said, I know they told you, right? Put the money in there. Don't pay attention to it. When you get your statement, you're going to be some reds and some negatives. And don't worry about it. It's going to come back. I said, but over the next 12 years, you don't have that kind of time.
Right.
I said, so you need to go online and you need to change your allocation, right? You can't be aggressive anymore, right? You need to be a little bit more moderate. He says, I'm going to call, and it was the other F company that was managing it, right? He said, I'm going to call them. And he was so mad that he called me and said, the guy says, oh, no, it's okay. Leave it like it is. You have time to grip it. He was like, no, I don't. Right? No, I don't. And that's what they tell us. And we got to
Yes.
be more realistic about what our goals are, right? What
Right.
our goals are so we can make sure we can maintain what we have. We don't want to lose that. So that's what we're helping people to do,
Yeah.
Right.
right? Just know
And
that there are other options.
the other part to piggyback on that is, Ms. Chris, you were talking about, we kind of know the building part, but the protection part we don't. That's where and why what we do is so important, because that's the education.
Right.
See, that's the education. And the way that we can tell that the education is so key is when we go back and look at the performance of what the retention is for census at 94% over the last 14 years. When you educate, people then understand the value of what they have. So then they keep it so that it can build and be protected.
Right.
When
Right.
you don't have the education, then all you know is, okay, I need to get this. But then when something happens, what's the first thing to go? Right?
Yeah. Yep.
And it goes away. So that's why what we do is just so incredibly important for our people.
Indeed. Indeed.
Mhm.
Well
It's
said.
easy.
Mhm.
Do you have any questions for us? Are you there?
Oh,
Are
I
you still-
definitely do. I got a lot to say, but I just been waiting
Go,
on my turn.
go ahead. It's your time. It's your time.
Go ahead.
Okay. Well, I just want to start off by saying I definitely learned a lot. This was a lot of information. I think I got a little bit of information overload, but it's okay. It's still processing. I'm gonna rewatch the video and make sure I got everything down. Um, I also want to say that I love what you guys are doing, especially for Black women, not even just Black people, but specifically Black women, because it's like we are the most like shitted upon. I don't know how to say that professionally, but it's like
It's all
everybody
right.
just like they try to walk all over us, and we have so much strength. It's like, oh my gosh. Okay, but anyways, back to this. Um, when I originally signed up for this, I was just like, oh, okay, financial services, that's something that I'm into. I kind of wanted to get into the insurance industry myself, but I wasn't expecting, about retirement and stuff like that, because I haven't even thought about that. I'm only 25. So yeah, I'm very young. I have not thought about retirement. I don't think people my age have even thought about it at all. So just to sit here and get this information, and I think I'm probably like the only person here. So I don't know. I just really think that this is a really good opportunity, and I would like to know, how do you get started? Because I did not go to college or anything like that. I barely got my GED. So for me, a person in my shoes, like, where would I go? Should I start? I think you said, hold on, give me 1 second. I think you said uh I could go find clients and introduce them to you guys, and then you can explain it a little bit better than I can, or something like
Yeah.
that. Yeah.
Absolutely. So Miss Daphne actually can set up if you want to share information with Miss Daphne, and she'll
Mm-hmm.
give you a call right after this to talk to you about how to get started. But let me share something with you, right?
Yeah.
Okay.
We work with millennials, and one of
Okay.
my top managers in my company,
Mm-hmm.
he's now 29, but he
Mm-hmm.
started in his business at 20. He does not have a college degree, and he
Okay.
earns six figures. And let
Mm-hmm.
me tell you what else, right? As a 29-year, I don't know if you live at home or not,
Yeah.
but he does still live at home. So if you ever meet him, don't tell him I told you this, right? But he is such an awesome, like, young people
Yeah.
soak up this information. And so
Mm-hmm.
this young guy, when we're talking about building your wealth, right?
Mm-hmm.
We're also talking about how do you move through what we call the cash flow quadrant. Because
Mm-hmm.
Robert Kiyosaki wrote a book, Cash Flow Quadrant,
Mm-hmm.
and he talks about how we earn our income. And so
Mm-hmm.
we earn our income number one as an employee, right? And so we're
Mm-hmm.
trading time for money. It's linear. And then we become
Mm-hmm.
self-employed, which we're just owning a job. So one, we have a job, employee. Two,
Mm-hmm.
we own a job because we're self-employed. Three, we become a business owner, right? We're building and we're
Mm-hmm.
working with a lot of people. And then four, we become an investor. This young man at 29 owns multiple rental property.
Mm-hmm.
Mm-hmm.
Okay. He has an apparel line. What he does with the money that he's been able to make here is he has now positioned himself to be able to retire by 40.
Mm-hmm.
And he has multiple sources of income, not just in his
Mm-hmm.
business, but with the rental property that he has, with the apparel business that he has, right?
Yeah.
Mm-hmm.
So, young people like yourself understand that we need to have multiple streams of income. And you're absolutely right.
Mm-hmm.
Retirement is not the first thing that millennials are thinking about, or Gen Zs. What
Mm-hmm.
they're thinking about, and this is what he educates us on, right? He goes,
Mm-hmm.
don't come in here talking to us about retirement. We're not thinking about that. We're thinking
Mm-hmm.
about how we're going to make a lot of money,
Mm-hmm.
how we're going to pay off student loans, and how we're going to buy a house. That's
Mm-hmm.
it. That's all we want to know.
Mm-hmm.
So
Absolutely.
he,
My daughter is 26. She
Uh-huh.
just into this business. My son is 19. He is in college. He just got into this business.
Okay.
So it's never too young to start.
Okay. Okay. I
And the
like
best
that.
and the best thing what you have is time, right?
Mm-hmm.
Yes.
We talked about
Oh,
that example of someone they wanted to get ready to retire, and he thought he had what, like a little over 800,000 in his account,
Mm-hmm.
and all of a sudden it's,
less
oh my
than
God,
half.
it's 300,000. He's in the retirement red zone right now, right?
Mm-hmm.
Because now he doesn't have that time window like what you would have, right?
Right.
So this is a great time to learn, to explore,
Mm-hmm.
to invest, right? You're not going to let it just sit there and,
Right.
ignore it, right? You want to be educated enough so you know what to do with it as you build it and
Mm-hmm.
then protect it and preserve it. But this is the best time to get
absolutely.
in for sure, right? And how you're
Mm-hmm.
able to help your family and generational wealth and your friends by you being educated on it. They may be
Mm-hmm.
apt to listen to you. Some of them going to be hesitant at first, right?
Mm-hmm.
You start to prove yourself and what you're able to do and educate. Because, what they say about the generations, the microwave society, we want
Mm-hmm.
the results right away, right?
Yeah.
And
Especially
so,
my generation, baby. We impatient.
Well,
right,
now,
we're impatient. We're tempted by a lot of things that we see on reality TV and social
Mm-hmm.
media and feel like those are things that we deserve to have right now.
Mm-hmm.
But a lot of times that's just instant and it won't last for a long period of time,
Mm-hmm.
right? And a
Right.
lot of times those people are renting.
Uh-huh.
They don't own anything, and you probably, like, the next couple of years, you probably won't remember who they are at
Mm-hmm.
this point, and they don't have anything left, to leave for their family. Or you hear about people who, they hit the lottery, and then the next thing
Mm-hmm.
you know, they're bankrupt after winning so many $1 million because they didn't know how to manage money. So this is a great time to be
Mm-hmm.
educated, because whether you
exactly.
have little or you have none, but you want to be the best keeper of however you handle your money,
Right.
right?
Mm-hmm.
So I know that
Mhm.
was long-winded, but I thought I'd throw that.
No, no,
And
no,
put
no,
your,
no.
and
I'm
put your
listening. Y'all just don't understand. I'm really listening. I love that I had this opportunity because, you know, being my age, I never really knew. Well, I'm at the age of I'm figuring out what I want to do with my life. But
Mhm.
when I was like 18, 19, I didn't really know what career I wanted to be in. I
Right.
just knew I wanted to work, and so that way I had enough to survive. That's it. And now I'm
Mhm.
just like, okay, I definitely want something where I can work and I'm able to survive, but I don't want to be just, barely making it and keeping my
Right.
head above the water like everyone else. And I want to be able to change my own community. And so I love that I
Yeah.
have the power to do both with this opportunity. And it's not something that you see all on YouTube with all these ads. Because I remember earlier you guys mentioned about somebody who, used all her money to go buy these investment properties. And I'm like, yeah, because in 2020, everybody was like, get into real estate, get into drop shipping and doing all this. But they're selling you these courses because this is crashing now. That's why they're giving you, well, they're not giving you this information. They're selling
Right.
it to you to make extra money because they know
Yeah.
Right.
that this is about to be a crash. So this right here,
Mhm.
I've got to attend to it for free. I got information that other people probably wouldn't even sat through or listen or paid attention. So I know that I
Mhm.
have an advantage. And also,
Yes.
um, when you spoke earlier and you were saying being in your field, you were like the only Black person and the only Black female. That's the type of industry I want to be in, because I know that a lot of people are not going to try and compete to get here because it's going to be hard to get here, but it's going to be hard for me anyway because I'm Black and I'm a female, so I'm willing to work hard to get to where I'm trying to get to,
I love it.
so
And here's the other thing you will love too is when you see our organization.
hmm
One of our co-CEOs is a
hmm
Black female. She and her husband.
I love it. I love it. I
You'll
love to see Black
see the
power.
faces of powerful Black women.
Hmm That's who I want to be surrounded
When
by.
you are in that environment, then you really step up your game. So
Yes. Yes.
you're not going to just survive, but
hmm
we want to see one another thrive.
Right.
Yes.
Yes.
Right.
Yes. I love
Mhm.
it. I love it.
Go on and put your information in the chat so when we're done, I can reach back out to you.
Okay, hold on one second. Let me see.
This was great. Soraya, because you
hmm
had a lot of great questions and comments. So
Yeah. It's been really
I
good.
Thank
love
you.
Mhm.
Okay. I'm gonna put my phone number. I put my first and last name and my phone number. Uh, do you need any other information?
No, that's it.
Okay.
I don't see it though. You're doing it now?
Yeah, I think it said. Oh, it said add at least one more person to the chat. Oh, I didn't add anybody. That's why.
Well, you know what? Just go on and give me your phone number and I'll
Okay.
call you.
Yeah. Yeah. It's 216
Uh-huh.
253
253.
0090.
And how do you spell your first name, Zariah?
ZAIREY
Uh-huh. Uh-huh. AY.
CA.
CA, like Charlie
Uh-huh.
Andrews.
Yes,
Okay,
ma'am. And
got
it's
it.
actually pronounced Zyerica.
oh,
Oh.
I'm
Okay,
And
'cause
so
I'm
I'm
like,
sorry.
I
I
was
can't.
looking at that. I'm like, okay,
it's
I
where's
okay.
the line?
apologize.
Honestly, I kind of like to let people struggle on it a little bit before I break the ice, because it
And,
gives you something
and
to
you
talk
know I
about when
was
you go
doing that
home.
too. So
You could be like, I thought this
Zaire.
girl,
That's a
I keep
beautiful
telling
name.
her name was
It
Zaria or
is.
Zarika, Zakaria. Like,
What's your
so
last
I don't
name?
know.
What's your last name?
Freeman,
Okay,
Freeman.
okay, got it.
Yes,
All
ma'am.
right, I'll reach out to you when we're done.
Yes, ma'am.
awesome.
All right.
Well,
Well, I
this
Okay.
has
thank y'all
been
for
an
this
amazing
opportunity.
session. Any last words, Lynn?
I thank you for the opportunity, Miss Chris. I thank, the organization Dress for Success of
Mm-hmm.
Cleveland, and I'm looking forward to doing more of these with you and just being able to share the information with the women in the community in Cleveland area, and expanding. I'm
Mm-hmm.
excited
Right.
to talk a little more with Miss Zy Erica.
Yes, ma'am.
Absolutely. So thank you so much for the opportunity. I really
Thank
appreciate it.
you.
Absolutely.
Thank you.
Absolutely.
And
And Chris,
Daphne, how about you?
again, as I said in the beginning, it's just always a pleasure to interact with Dress for Success. It's even
Mm-hmm.
more of a pleasure because this is my hometown, and
Mm-hmm.
I just really want to reach back and help the women in our community in my home city because there's so much. There's just so much that we can do when we collaborate. We are unstoppable. So
Right.
I really appreciate this, and I'll reach back out to Melanie. But when you talk to her, let her know that this was just such a blessing all
Yes.
the way
Yeah.
around.
Yes.
And
Thank you.
Full energy.
yes, 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 yes. And Zaire, I'll reach
Yes,
back out
ma'am.
to you as soon as we
All
hang
right.
up. All right,
All
dear.
right.
All
Thank
right,
you. You
Okay,
ladies.
guys have a
ladies. Well,
great
you
night.
Thank
enjoy
you,
the rest of
ladies.
the day,
Bye
and we'll
bye.
be
Thank
talking
you.
in about 2 weeks. Have a
Yes.
happy Thanksgiving.
You
Happy
do
To
the
you as
Thanksgiving.
same.
well.
Thank you, both of you.
Take
Bye
care.
bye.
Okay, take care. Bye.